Hey, it's John again. You know that I invest in syndications, real estate, and promissory notes. Did you know that I also invest in wine too? Believe it or not, you don't have to be filthy rich to enjoy the returns of this asset class, which beats the S&P 500. Find out more on this interesting investment today on the Wealth and Freedom Nexus podcast. This week's podcast is brought to you by Spartan Invest. Spartan currently manages hundreds of turnkey properties across Alabama and Tennessee and is where I personally bought my first out-of-state turnkey property. In fact, I have two properties with them now, and both tenants just renewed for another 2 years. That should tell you the quality of their team and their due diligence. If you are a first-time investor or looking to expand your real estate portfolio, check out SpartanInvest.com.
Are you tired of the 9-to-5 lifestyle? Do you want more freedom to do what you want, when you want it, without sacrificing your current income? Then this is the show for you. Every week, we dive into John's journey towards financial freedom and everything he has learned since 2014. Real estate investing, cryptocurrency, stocks, private lending, foreign residency, tax saving strategies, infinite banking, assets protection, and much more. Now, here is your host, the founder of the Wealth and Freedom Nexus, John Rickgarn.
Good morning, afternoon, or evening, depending on when you're listening to this. This is John Rickgarn, your host, as always, of the Wealth and Freedom Nexus podcast. Now, so far, if you've been listening from the beginning, you've heard me bring on guests and talk about, real estate investing, foreign real estate, teak investing, promissory notes, and many other different types of investments. I'm a big believer myself of diversification. And when I hear someone say, well, I got Facebook stock, I got Exxon stock, I got Amazon stock, I got Emerson Electric stock, so I'm diversified. Like, no, you're diversified in paper assets. And at the time of this recording, unfortunately, we have some turmoil going on in Eastern Europe. So obviously we get geopolitical events, and that can very well, put downward pressure on any stock, whether it's, Amazon, Pfizer, whatever the case may be. And today I brought on a great guest, Christopher.tenorio from Vino Vest. And as you might hear from the name, this is an investment in wine. And I think this is probably one of the more, I don't want to say abstract, but definitely out there investments. I think a lot of people envision, well, if I'm investing in wine, I need to have this $10,000 cooled cellar in my basement or something like that. And that is definitely not the case. So with that, I'm actually going to have my guest take it from there. Christopher, welcome to the show.
Thanks so much for having me, John. Super happy to be here. Listen to a few episodes. So a bit of a fan here and listen to some of the other content. Always great to get more opinions out there for diversification, and very glad that we can bring wine into the mix.
Yeah, absolutely. And thank you for listening. And again, anyone listening to this, be sure to hit that subscribe button if you haven't already. Now, Christopher, kind of a two-part question. Maybe you can just give us a quick background of yourself, but then also, how and when VinoVest, kind of was created.
Absolutely. More than happy to. So my background is primarily in traditional finance. I've worked as an investment banker, been a high net worth broker-dealer for kind of international clients, registered investment advisor for UK clients as well, high net worth. And then most recently joined VinoVest here to help them build out and think about how we should be, again, building out portfolios, thinking about wine as an alternative and a diversifying tool. Now, taking a step back here, VinoVest, we started in 2019. This was founded by Anthony Zhang and Brent Ackerman, both serial investors. Brent Ackerman was really influential in the design of TikTok. Part of the reason it's had some success. If you come onto our website or our app, you'll see how lovely it's designed, very easy to use, very intuitive. So a lot of credit to him. Then we have Anthony Zhang, who's our CEO and founder here. Again, he's founded a couple companies. And really the idea for VinoVest came about from his own personal struggles. He'd sold a couple of companies. He had some money. He was looking to diversify, really big into crypto. He obviously had his equity portfolio and was looking at other alternatives. And he'd come across some information about how great wine can be as a long-term investment, in a lot of cases beating equity markets over the last 20, 30, 50 years. And so the idea was, well, how do I get access to that? And as you can imagine, there's a number of hurdles that come along with that if you try to do this by yourself. Knowing what you want to buy, The big hurdle is getting access. A lot of these are limited supply, limited access. So getting access to this wine is a big deal. Then, as you mentioned, you got to store this wine somewhere. So, does that mean a multi-grand investment into your basement to turn it into, humidity, temperature, light controlled situation? And then ultimately knowing when to sell it and then finding a buyer to actually buy it from you. So there's all these complications with it. And so, Anthony, reflecting on this asset class, low volatility, it's uncorrelated with equity and traditional asset classes, and it has really good return characteristics. So when you reflect on that, you think most people should probably have some exposure to this asset class as part of a kind of well-diversified portfolio. So why can't we make this more accessible? And that's really where VinoVest came from. And so we're out to, quote unquote, democratize wine investing. So we do all the heavy lifting. We source the wine, we buy it, we store it professionally, we insure your cases. And when it comes time to sell, we'll go ahead and find you a buyer and go ahead and transact that for you. So we're doing all the heavy lifting there.
Cool.
So that's the root of it. Yeah.
All right. Very interesting. Now, kind of touched base on a little bit of this too. And I mean, I drink wine and I invest a little bit through the platform, but I am in, no way, shape, or form a wine connoisseur or could pick out a, whatever 1860 vineyard, Italy, whatever the case may be. With that, how does one invest in this? How can one start investing in this platform? And what is the minimum investment for someone to get started in?
Yeah, great question. So ultimately, it's very simple to do, especially on our platform. It's as simple as coming on board. You fill out a few questions. We'll ask you about what kind of goals, objectives, time horizon you have in mind. How aggressive do you want to be with this portfolio? And then we will leverage both our experts. So we have a team of master sommeliers and some veterans in the industry who help at a very high level design this. We also have an algorithm that we've designed ourselves to help source the best wine, scraping data going back, 50 years of what producers, vintages, regions have done particularly well. And with all of those inputs together, we'll go ahead and automatically fill in your portfolio for you. So you can start with as little as $1,000. And then there's kind of no upside on that. Meaning no limit, right? You want to come in with 250,000, we'll find you wine. Want to come in at $1 million, we'll find you wine. And we've now in the last month just launched a new service on our platform where we're now doing single bottle investments. So it's no longer managed. You can buy single bottles. You can buy and sell anytime you want to, very much like a stock exchange. And just another layer of democratizing this asset class. You don't have to commit to a full case, and you can get exposure to really rare vintages without having, again, to commit to that full case. So you can get a lot more exposure and diversification without needing to, deposit very much.
Okay. Interesting. I actually didn't know that myself. I just started, I think, about a year and a half ago through the platform. I got a case of something I'd actually have to look right now, but buying an individual bottle of wine, that definitely sounds interesting. And like you said, maybe mix and match a little bit like that.
Exactly. Yeah.
Now with that, and being that you can obviously buy a case, $1,000 worth, $1 million worth, whatever the case may be. Once say an investor is set up on the platform and they have an account set up, are you able to automate any investments? Can you just set up I want $100 a month going in on every month, or, is that a possibility at all?
Absolutely. Yeah. So we'll be super transparent here for your listeners. The average cost of a case of wine is about $800. Again, we're buying a six pack of wine. We're speaking strictly investment grade wine, which if you think about global production, we're talking about less than 5% of global production every year. So a very small subset. And because of that, it does end up being a little bit more expensive. So $1,000 will get you started with a case or two. Obviously, with a bigger portfolio, we have more opportunity to get you higher priced wine, get you more diversification by region and vintage. That will definitely improve your odds of success here, much like an equity portfolio or bond portfolio like that. But yeah, so you do have some options as far as getting involved if you want to. You can speak to a portfolio advisor like myself. You can go onto our website, schedule a call. We can consult you a little bit, share our ideas, what we think is interesting. And then if you're above the $50,000 investment level, you get access to a personalized portfolio manager. You have unlimited kind of customization. You tell us the vintage producer will source it for you, or quarterly we'll come to you with a list of ideas of where we think you should be invested.
Okay, cool. So, and now with this, and say an investor is getting on this platform, and every investor is a little bit different, but what's kind of a minimum time horizon someone should look at? Is this I know you mentioned before this could possibly outperform the equity markets going back 10, 20, 30, 40 years. Is that the type of horizon an investor should have, or do you recommend like a minimum 1 year, 3 years? How does that work?
Yeah, so normally we would advise our clients to think about this for at least 3 years. But
Okay.
if you go on and look at historical vintages and how wine has performed, generally you start to see wine pick up between about 2 to 5 years after
Okay.
it's been released. Part of that is kind of a couple of things. One is that when you first release wine, you have all that supply out there in the market. So very easy to get it in multiple places. There's a little bit more volatility. As
Okay.
that supply is drunk, bought up, etc., that those prices tend to stabilize. And as people
Okay.
consume that wine, scarcity plays a big part in this. And so with less options out there, you have much more leverage to charge a much higher price with wine. So if you have the flexibility and the patience, let it ride. A lot of this wine can easily age 15, 20 years. And that's
Okay.
really where you start to see a lot of that growth because, again, very few places you can get it, a lot more leverage.
Okay.
But there's a lot of flexibility. If you need it for 3 years, 5 years, 7 years, we can work around that. We can buy older vintages that have already had a number of years on it. You kind of just scoop up the last few years on that investment. Or again, if you have a higher time horizon, we can buy your younger wine and really let that thing, age appropriately, and you can capture all that upside.
Oh, very cool. And now with you, I kind of relate to the scarcity of it, and I kind of look at, I don't know, I'm not a huge crypto enthusiast, but I know like Dogecoin and even Ethereum, people talk was like, oh well, there's an infinite supply out there, and if Elon Musk wants to get some more funding for Tesla, they could easily issue another 100 million shares of Tesla or whatever the case may be. So it kind of dilutes what already is out there. But if there's a certain, vineyard, 1960, 1930, whatever the golden years are, I mean, I'm assuming you nor anyone else can't just snap their fingers and, come up with more wine. I mean, yeah, they might be able to go to the winery. Okay, yeah, everyone likes the Chardonnay from here, so we'll get a couple more bottles, but well, it's not that particular brand. It didn't come from this year. Is that, kind of what you see in all wines, or is there also some flexibility where, some vineyards maybe have more of a supply than others?
Yeah, I mean, it's definitely going to vary by producer.
Okay.
Certainly on the very, very high end, we're talking high end investment grade wine. Generally
Okay.
speaking, you want lower production yields on those vines. You get better grapes, more rich flavors, and generally that goes into creating better wine. So like famous producer out of California, Screaming Eagle, they only
Okay.
make about 500 to 850 cases every year. They
Oh,
have a
wow.
waiting list going back like 14, 15 years for people trying to get an allocation for some of this wine because it is that highly regarded and there's that little production.
Wow.
Even things like chateaus in Bordeaux, a lot of them only produce about 2,000 cases a year. So very much a collectible. And with grapes, you only get one harvest per
Mhm.
year. You only get one shot at this. Something like beer or even like cider. You can go and buy grains multiple years. You can take multiple shots at this.
Sure.
Wine, you get one and done. So
Yeah.
there's no way to make more after that. What we are seeing now more often is wineries will hold back some of the supply at the beginning.
Okay.
They will age it themselves, and then they'll capture some of that upside down the road when they release it again down the
Oh,
road.
okay.
So that's another way for wineries. But again, that means that you're sitting on cash flow. That can be tougher for some smaller producers.
Sure.
So it kind of just varies there. But a great wine producer really may only get 30 vintages in a lifetime. So again,
Okay.
very, very small amount being produced, which is part of the value here. It's that scarcity at play.
Sure. Yep. Scarcity, and then also, the demand of it, because I think demand for
Exactly.
wine's been around for at least centuries that I've been able to see. So
Sure.
now
And
with
it's
that,
global.
yeah, exactly, global. So now with that, I know you kind of allude to the time horizons, at least 3 years. Now, is that also correlated with a, lockout period? Like say someone comes in and invests, I'm just throwing around number $1,600, buys about 2 cases of wine. But I mean, life happens, something comes up, a dramatic event. Are the investors, are they locked in for a certain period? Is there an early, sell penalty or prepayment penalty or anything like that?
Yeah, so on the VinoVest platform, generally we try to be pretty flexible so you can
Okay.
kind of get in and out. If it is before that 3 year period where you do need to retract funds, there is a 3% penalty that does come into play.
Okay.
What I will say is that, and I can't reveal too much here, but we have some
Sure.
interesting new, financial tools that are coming down the road, ability to, be able to borrow against your
Oh, okay.
holdings almost as collateral. So if you need
Nice.
quick liquidity but don't want to sell your cases, have that option. Or if you want to use it almost like margin and get more cases of wine,
Okay.
maybe something like buy now, pay later. these are the kind of instruments that we're kind of playing with. And I think in not too distant future here, we'll have out there for our investors.
Very, very cool. Yeah. I'm all for collateralizing assets. I've done that, with, cash out refis, HELOCs on a real estate. Got 4 cryptocurrency platforms that I can take out, 40, 50, 6% loan to value loans on. So it's definitely kind of it's kind of a best of both worlds. It's like, well, I need the cash, but I don't want to sell this. And the other nice thing too is, well, if you're taking out debt, that is not taxable. Where if you're selling your wine, your crypto, your real estate, you're going to be hit with short or long-term capital gains. So there could very well be some tax savings or tax benefits as well.
Absolutely.
This week's podcast is brought to you by Focus Wealth Group. Do you know you need to get life insurance, but don't know where to start or how much to get? Have you heard of infinite banking, but not sure how it works? Reach out to Barry Brooksby and his team. Barry is not only a mentor, but a friend who has helped me for the past 6 years in my pursuit of cash flow and financial independence. Their mission is simple. They teach people how to make money and hold on to more money. Learn more and set up your free initial consultation at focuswealthgroup.com.
So now this is just kind of my free thinking. And last week's podcast, as of this recording, had brought on Fred Maskowitz. He's very much into mortgages and promissory notes. And I always kind of look at assets of, okay, is it a long-term holding? Is there more tax benefits to have it inside a retirement account versus outside? And when I first heard about this platform, I was like, oh, absolutely. Anyways, but I was automatically thinking, it's like, all right, I'm going to call up a specialized trust. I'm going to open up an account. Now I'm going to buy wine in my self-directed Roth 401k. And then I come across this interesting tidbit with the IRS that the few things the IRS says you can't invest in a retirement account, wine is one of them for whatever reason. Are you able to speak of that, or maybe have you heard anything as to why wine is not allowed in IRAs by chance?
Yeah, I mean, if I had to think about just the characteristics that go into being successful in a wine investment, it's perfect for a 401k, right?
Mm-hmm.
Low volatility, low risk, uncorrelated, high long-term return, something you need to be patient with. 401ks, generally IRAs, you can't touch it until you're, 55, 60, whatever it may be.
Sure.
So like, that's the perfect vehicle to do this with. But as you said, right now, legally speaking, you can't do that. There's kind of 2 thoughts that I have on that. One is that I think the US just want to stave off people kind of cheating the system. You don't want people spending their retirement on alcohol. I mean, it's true, right? Because if you buy wine on Vino Vest, we can send you the case of wine. You don't have to keep it in storage or sell it as an investment. You can just drink it yourself. So if you set it up, you could theoretically just drink your 401k away. And I think the government is a little cautious on that.
Sure.
The second thing too is that especially with the tax treatment, the U.S. government wants to encourage investors to invest in what they would consider productive assets. So things that create cash flow, that hire employees, that invest in capital infrastructure, et cetera. With wine, there is no cash flow, there's no dividends. You're buying and holding, it's a collectible. So, the US government is just going to want to rather you invest and move that money elsewhere, would be my thought.
Oh, that's actually, really interesting. I haven't thought about either one of those. A long time ago, I'd read, because there's some platforms where you can actually buy, art or, whether it's Mona Lisa, or again, I'm not an art connoisseur by any stretch of the imagination, but I always thought it was kind of funny. It's like, well, why in the world can't I buy art? And a lot of it stemmed actually from a court case years ago. I don't remember the details, but there was a family that had a Roth IRA. It owned a piece of artwork. Turns out they did a little bit of a back trace or, looking backwards, and the particular, art form or portrait or whatever it was actually legitimately owned by a family years ago in Europe, and it was stolen by the Nazis. The Nazis took it in, became their property. Nazis were defeated. It hit the open market, whatever the case may be. And interestingly enough, when the family was trying to get that artwork back, or their, children or grandchildren, whatever the case may be, it really became a legal battle because IRAs are a trust and there's a lot of asset protection with it. So they actually couldn't get that artwork back. So then it kind of created a couple more interesting court cases. So they just said, all right, that's it. No one can have art in a retirement account, which then I look at, it's like, okay, if someone's buying a 1995 painting. I think it's safe to assume that it was never in Nazi possession, but I think the IRS just kind of likes to maybe take the easy way out, if you will.
Sure.
I think not too long ago, or from the time of this recording, checkbook IRAs were just deemed illegal because a lot of people were buying gold and silver, and they were told wrongly that, oh, you can buy gold and silver and stick it in your safe at your house. Well, then you're in possession, where technically an IRA says you need to have a custodian. And again, then they just said, okay, instead of limiting access, we're just going to rule all checkbook IRAs illegal. And I think from what you hit on the first point, that does kind of make sense if they're looking at this and like, well, Christopher, I got this case of wine, go ahead and send it to me this December. I'm just going to have this huge New Year's Eve party and drink up, and I'm drinking away my retirement account. Like you said, I'm taking possession of the holdings, and obviously that's a big no-no when it comes to the IRS. So again, I just kind of wanted to go down the rabbit hole a little bit. I was just kind of interested because like I said, when I first heard about this, I'm going to park it in my Roth IRA and have this grow, 30, 40 years. And well, obviously that kind of blew the wind out of my sails with that. So, but I still view it as a definitely a good investment with a long-term history. I have an account. Obviously, it's not in a tax favored account, but it definitely has its, pros with having that. So.
Absolutely. Well, I can't make any promises, but that is definitely a conversation we're having. And who knows, if we continue to grow, maybe there is some way that we can, lobby for changes or exceptions, or some way of just locking up people's assets where they can't get access to it at something.
Yeah, there's another platform I'm actually kind of researching a little, and maybe this will come about with investing in wine, but I think it's the securitization of assets where, call it splitting hairs or a legal loophole, that technically Christopher nor John do not own the wine in a retirement account. They own shares of a syndication, that syndication owns the wine. So with the various levels of ownership and separation, I'll let the courts and the lawyers figure that out. But that might be an option going down the line. Who knows? Yeah. So. Yeah. Again, just for anyone listening, we are not accountants. We're not CPAs or attorneys or anything. This is not financial advice. This is just kind of talking outside the box, or thinking outside the box here. So now you had mentioned the penalty, Christopher, if someone needs withdraw earlier from their account, but maybe just overall, can you talk a little bit about the fee structure with the company and how that maybe relates to other assets or hedge funds or alternative assets?
Yeah, absolutely. So, very, very simple, straightforward way that we approach this. Again, we don't charge anything on the front end as far as purchasing wine. We don't charge anything on the back end when we go to sell the wine. Okay. Really, it's all about management. And that management fee includes, again, professional storage. It includes insurance, and ourselves as advisors here to you, as we go down the road. Depending on what level of investment you come in with, at the short end of $1,000, the 2.85% annual rate. As you go up the tiers, that fee will come down. So at 10,000, we're at 2.7. At 50,000, we're at 2.5. $250,000 plus, we're at 2.25. And so that is an annual rate. It does come out monthly. So we kind of just divide that by 12, and it kind of comes out of the cash balance in your account monthly. Okay. And again, just to kind of service that. And so it's just really more that management than anything else.
Sure. Okay. Sounds good. And then you had mentioned with the cash balance, so you could essentially put in some extra funds, or could you pay the fees outside of your account? Is that a possibility? Or
absolutely, yeah. We always kind of set aside a little bit of cash every time you deposit, just again to keep your account current. But if that runs low, we can absolutely set up recurring payments, via Stripe to directly charge a credit card or a bank account. So again, makes your life very easy. You don't have to continue to kind of upkeep and feel like you have to, keep watch of it or keep depositing every so often.
Sure. Sounds good. Yeah. And I always like having that option, regardless of the account, of just, pay the fees separately, where I think Wall Street has gotten us very used to, where the fees are essentially deducted from our returns, and they can show on paper, oh, this has a 12% return. Well, that's before fees. And, oh, by the way, all these fees we don't have to disclose. There's a 12B fee, et cetera, et cetera. So one, I like and appreciate the transparency, looking at 2 to 3% annually, depending on the size of your portfolio. And obviously, like you said, there's management to this. You got to store the wine, you have to insure it, you have to have advisors and overhead, which I mean, myself personally, am just fine with paying that fee to someone else that knows a lot more than me versus I got to buy a seller. I got to find Lloyd's of London account rep that can give me insurance for this, so on and so forth.
Exactly. Yeah. So we try to make that as easy as we can for anybody to get involved, do that heavy lifting for you.
Okay. And now we touched base a little bit on the insurance, but obviously the wine, as an investor, it isn't in my possession, but where is the wine, stored? Is it in California or the Arctic Circle or, top secret bunker, or is there multiple places that this is stored around the world?
Yeah, so most of our wine is currently being stored in London. So I think we have 2 or 3 storage facilities there. You can actually,
Okay.
if you're ever in the neighborhood, you can go and visit and see your wine in
Oh,
person. We have a blog post on there. So if you find our blog, it's in Bond, you can go check it out. But we have had clients go visit it. But we do have storage everywhere. We've got storage in Napa Valley, in Bordeaux, in Switzerland, in Norway, Hong Kong. I believe we're just opening one up in Singapore. But the
okay.
idea there is that we want to store the wine as close as we can to the point of purchase to try to eliminate any kind of risk to those cases in transit. Once you, especially now with supply chain bottlenecks,
Yep.
Things getting stuck in docks, it opens up a lot of risk to those bottles. Again, if we want to store this properly, you have to avoid jarring that bottle. You have to avoid exposing it to direct light exposure, humidity, temperature control, etc., to make sure that wine is still aging appropriately. So we try to eliminate all of that based
Okay.
on, again, where we're buying that wine.
Okay. Yeah, it makes sense. Obviously, if you're growing it and then shipping it or, whatever by truck and a couple hundred miles versus packaging up in California and shipping it to Singapore, however many thousands of miles that is.
Exactly.
And that obviously could lead to many other issues. So,
Exactly.
all right. Well, this has actually been very informative, Christopher. I've been an investor through this platform, I think soon after it started, and I got a full page of notes here that I'm going to have to look back on later. Is there maybe anything I should have asked or brought up that you can think of, or maybe some additional information you can give my listeners?
Well, certainly if anybody wants additional information, again, you can always speak to an advisor. I think it's one of the beauty of our platform. With wine, you go back to Europe or even London, there's a rich history, a close connection to wine culture. And that's not something necessarily that we have in the US. And so there is a big educational component to this. So, if this sounds interesting to you, you want to find more, come speak to an advisor like myself. We have plenty of qualified people who can help you with that.
Okay.
We have a blog that's going. I just started a podcast for Vino Vest. You can find that if you go to VinoVest.co, which is our website. There's a community that you can join. It's kind of like social media for kind of wine enthusiasts.
Okay.
And we're posting content on there. People are asking questions. People are giving wine bottle recommendations, et cetera, et cetera. So if you want to join the community, get in the conversation, feel free to find us there.
Okay.
Beyond that, the only thing I'd say too is that there's a lot of flexible options as far as investing. Some people use us strictly for investment returns and they just want as much growth as you can.
Okay.
Because of the volume that we are dealing with, and because we have a number of master sommeliers on the team, we are able to leverage a lot of their connections. Sometimes we go direct to producers to get that wine directly. We get access to a lot of rare things. We've always got DRC. We've always got some, rare, collectible items for our really big investors. And a lot of times people will do a little bit of a split portfolio. Here's 20%. That's going to be my personal consumption. Hold on to it for me for 20 years, and I'll come back to it and drink it. And we'll let the rest of that portfolio, cover my drinking habits, if you will, on that. So there's a lot of flexibility there. And same thing is about how aggressive you want to be with this portfolio.
Okay.
If you want to be very conservative and you just want a safe place to park your assets to fight inflation, which is a big topic of discussion at the moment, wine is an excellent asset class to kind of hedge against that. So if you want to stay very conservative, we can look strictly at Bordeaux and Burgundy, classic old world, an area that always has consistent demand for it.
Okay.
Or we can start to look for more growthy areas. California, Champagne, Burgundy have been done very well over the last 10 years, as has kind of Tuscany. And part of that, I will say, is driven a lot by demand from Asia. They've kind of bought up a lot of Bordeaux, driven up prices, so investors are looking elsewhere. The other thing too, I'd say, is climate change has had a real impact on wine production. And so one of the things that we do is that we keep track of all that stuff. So we're buying up as much 2018 California wine we can get, because we know 19 and 20 smoke damage, fire damage.
Yep.
Champagne this last year and Burgundy, I think both of them lost about half of their crops to frost.
Oh, wow.
And so those supply limits create opportunities for us, because we know demand is going to stay the same, if not grow, but supply is shrinking. So we're trying to buy up as much of that. So those are the kinds of strategies that we can speak through with our clients. And then if you want to get super aggressive or very aggressive, we can look to, emerging markets, South America, Australia, South Africa, areas that maybe don't have quite the name recognition, but they're producing excellent wines. And the hope is that with time, those will grow and build a reputation globally. So maybe you can capture some of that upside. So there's a lot of flexibility to the platform. Again, a lot of solutions here, but reach out to us and be more than happy to speak through some of that stuff.
Sounds good. And that would that just be through the website vinovest.co, or is there an
Correct.
email address, or I don't know if anyone picks up a phone nowadays to make calls? But,
well, that would be the easiest way to do it. If you just go to the website, again, you can sign up for a call with an advisor, and then that'll get penciled in. We'll have someone reach out to you. We have employees all over, people in London, Colorado, East Coast. I'm on the West Coast myself, so we'll find a time to speak with them. You can even get in touch with me personally. If you like what I'm saying and you want me to be your advisor, reach out. Christopher.tenorio, Tenorio, at VinoVest.co. You can just reach out, and more than happy to answer questions and get you started.
Sounds good. And again, for anybody listening, I'll have all these links and contact and links to the blogs and everything else that we've discussed in the show notes, so you don't have to hit rewind and try to write that and get the spelling correct and everything. So, all right. Well, as we're wrapping up, I just wanted to say thanks again, Christopher, for coming on to the show and sharing your knowledge. And hopefully at least a couple of my listeners, can see the benefit and diversification of adding this to their portfolio and growing their wealth and hopefully their financial freedom later on.
Absolutely. I'm all about that. Well, thank you, John. Thanks for giving us the opportunity, and thank you for having me on here. I'll keep listening and keep learning along with you.
Sounds good. I appreciate it. Thanks, Chris.
Thank you for listening. Be sure to share, rate, review, and subscribe on your favorite podcast platform. For more updates, check out www.wealthandfreedomnexus.com. Remember, nothing on this show should be considered tax, legal, investment, or professional advice. This show is produced solely for educational and informational purposes. Please consult an appropriate and licensed tax, legal, real estate, or business professional for specific advice for your situation. For distribution or publication rights or media interviews, please contact the host.